As a lot of people anticipated, SoFi's post-earnings rally was short-lived, which isn't surprising when it comes to how most stocks behave. Since hitting prices briefly of around $8 a share, in the days following its latest earnings release on January 30th, SoFi stock has fallen back down a bit since then. So with that in mind, do I personally think that shares of this stock have re-entered the buy zone? Yes, I do. I think that since this stock, along with a lot of others, has been struggling since 2022, I definitely think it'll be able to recover to much higher prices over the next few years. So let me explain. It didn't hurt that SoFi beat expectations in the latest earning report and wowed a lot of investors with updates on outlook. But to be honest, that wasn't the sole reason why shares went higher between mid-January and early February. You see, another major factor pushing SoFi higher was the market's renewed enthusiasm for speculative growth plays, I think. So with hopes that the Federal Reserve would start to pivot towards a more accommodative interest rate policy, the idea of risk on has started to come back. However, more recently, confidence in the Fed pivot thesis has started to erode a bit, to say the least, with the latest consumer price index date indicating that inflation is still here to stay. The Fed has also reiterated its hawkish stance regarding interest rates, more or less. So ultimately, this means that stocks valued primarily on future potential rather than current results, such as SoFi, have reversed course. And as plenty of economic data signals a growing chance that the Fed becomes more aggressive with future rate hikes, stocks like SoFi may be at the risk of further price decline, unfortunately. Nevertheless though, whether at current prices or if this stock falls back down into lower territory, I think it's important that investors really start to pay attention to this stock, and here's why. First, in light of SoFi's strong year-over-year revenue growth, which was 60%, I think that the current consensus among analysts for SoFi are likely conservative. You see, looking beyond this year, continued growth I think may enable SoFi to report much higher earnings than the bearish perspective currently expects. Instead of earnings slowly climbing from 3 cents per share next year to 50 cents by 2026, I think in 3 years' time, SoFi could be earning much more than that. And secondly, I just think that SoFi will be able to sustain a much higher tech multiple, which could be 20 to 30 times earnings. Mostly because at the end of the day, SoFi is indeed a technology company, and over the course of the next few years, I can really see them making some huge improvements to their technology platform. So with the stock where it is right now, I think waiting for additional weakness is the optimal move right now, as there's a strong chance SoFi resets its 52-week low, bringing it down to about $4.24 a share. However, this is only if you truly want to maximize your returns. You don't necessarily have to wait on the sidelines till it reaches these 52-week lows, as I think locking down a position on the next trading day could still prove to be a very profitable move in hindsight, especially since I see this stock soaring much higher over the next few years. And with that, I think I'd like to wrap up the video here. Thanks as always, and I'll catch you next time.